Welcome to Accounting for Business Decisions A, where today's topic will be on journal entries. So let's get to it. What is the journal entry? It's basically a chronological order of all business transactions. Here's a basic template of what it should look like. In the accounting cycle, this is the step before posting to the ledger, also known as the T accounts. But don't worry about that yet, because we'll get to that later. For now, we'll just focus on journal entries. It is very important that the debits must equal the credit side. This is to ensure that your accounting equation is always kept in balance. Like anything in life, there are some ground rules, just like in accounting. Different accounts are debited or credited according to if they increase or decrease in value. Here's a table summary. For example, when an asset increases, we debit it and put it on the left. When we decrease an asset, we credit it and put it on the right with a small indentation. Let's get started with a quick tutorial on how we do the journal entry. Kate's Catering Company bills a client $5,000 on February 3rd for services in 1 month's time. The first step is to identify what accounts have been affected. In this case, it's accounts receivable and unearned revenue. It's accounts receivable because Kate hasn't yet received the cash from the client, she's simply billed them. Unearned revenue because Kate hasn't yet done the service. So the second step is to identify which account increase and decrease. Accounts receivable increases, so we put it on the debit side. Likewise, for unearned revenue, it also increased, and so we credit it. And lastly, it's recording the journal entry. And this is what it should look like. We have the date on the left, account name, and the amounts that we debit and credit. Notice that the credit has been indented like I mentioned before. Transaction 4. Kate's Catering Company pays her 5 casual employees $300 each for their work in the last fortnight on February 12th. Here's the date and which accounts have been affected. Here it's salaries expense. The tricky part here is getting the right calculation, because Kate has 5 employees and she needs to pay them $300 each for their work. Her total is $1,500. The next account is cash. Because she's paying her employees cash, we decrease it, which means we credit it $1,500. Thank you for watching my quick tutorial on journal entries. I hope you were able to learn something out of it.